Look at this breakout. Every textbook on earth tells you to buy the retest right here. That's a trap. That's where they want your stop loss. Now watch. That wasn't a retest. That was a stop hunt. And that's the real entry. You see, everything you've been taught about breakout retests is a lie. A lie designed to do one thing, make you the liquidity for the smart money. So let's crack the code. To beat their trap, you only need to know 3 secret moves. Here's the first one right now. Let me show you what's really happening when the market retests a breakout level. Most traders think it's random. They think the market just decides to come back and test the level for no reason. But here's what they're missing. When that breakout happens, there are 2 groups of traders in the market. You have the breakout traders. These are the small guys who placed their orders right at the level, waiting for the break. And then you have the smart money, the big players. Now watch this closely. When the breakout finally comes, all those retail orders get filled. The breakout traders are now in profit. They're thinking, finally, I caught the move. But the smart money, they didn't enter at the breakout. They entered way earlier when nobody was looking. They've been sitting in profit for a while now. So what happens next? The smart money starts taking profits. They're not greedy. They don't need to ride the entire move. And that profit taking is what pushes the market back toward the breakout level. It's not random. It's not the market testing anything. It's smart money cashing out while retail traders are just getting started. Think about it from the retail trader's perspective. You entered at the breakout. You were in profit. Now you're watching that profit shrink as the market comes back toward your entry. And what do? You get scared. You close your trade while you still have some profit left. Different traders panic at different times. The closer the market gets to the breakout level, the more traders bail out. And when they close their trades, they're putting opposite orders into the market. Orders that the smart money is happy to take. Let me show you something most traders never notice. When you see a breakout happening, you're not seeing the beginning of the move. You're seeing the end of smart money's accumulation phase. Before the breakout, smart money has been quietly building positions, while small traders are waiting for confirmation. During the breakout, retail traders flood in with their stops and targets, providing the liquidity smart money needs to begin their exit. During the retest, smart money uses retail panic to build new positions in the opposite direction or add to existing positions at better prices. This is where most traders get trapped. They see the market coming back to their entry and think, I need to cut my losses before it gets worse. But this panic selling is exactly what smart money was waiting for. Watch what happens when you add this perspective to your analysis. That failed breakout suddenly looks like a perfectly executed liquidity grab. The retest isn't market indecision, it's institutional precision. Let me show you something that will change how you trade retests forever. Look at this chart. Most traders would mark this breakout level with a single horizontal line. They'd put it right at the high and call it a day. They see the breakout and wait for price to come back and touch their perfect little line. But watch what happens. Price breaks out, comes back, but barely misses their line before taking off. They miss the entire trade because they were too precise. Or worse, price comes down, wicks right through their line, stops them out, and then reverses. Here's the thing, support and resistance are not single price points. They are zones. They are areas where a significant battle between buyers and sellers took place. Now watch what happens when we stop drawing a line and instead draw a box, a zone that covers the entire area of congestion, from the candle bodies to the tips of the wicks. Completely different story. Now, when price retests this zone, We aren't guessing if it will hit an exact price. We know that any price action inside this area is significant. This simple shift from a line to a zone does three things for you. First, it removes the stress of getting the exact level perfect. Second, it accounts for the entire area of liquidity, not just one arbitrary point. And third, it gives you a clear area to define your risk. Your stop loss doesn't go below a line, it goes below the entire zone. This is one of the biggest yet simplest changes you can make to your trading. Just by making that one shift, you've eliminated one of the biggest reasons traders miss or get stopped out of perfect retest trades. Here's a situation every trader faces. You see a breakout, you see the retest, you think it's time to enter, but you're not sure if it's a real move or a fake out. The problem is, most traders only look at price action. They ignore the one thing that tells you if the breakout is real or fake: volume. What you really want is to know if the breakout has real institutional backing. You want to know if the smart money is actually involved in this move. The result is a simple volume filter that eliminates most fake breakouts. Here's how it works. On the initial breakout, you want to see volume that's well above average. This tells you there's real effort behind the move. It takes energy to break through a level, and that energy shows up in volume. But here's the key takeaway. On the retest, you want to see the opposite. You want to see low volume, because now you're developing a trend. In a bullish trend, you want to see rising volume on the moves higher and falling volume on the pullbacks. Most traders think all breakouts are the same. They see the market break a level and assume it's good to go. But big money players know that not all breakouts are created equal. The amateur approach is to trade every breakout that comes along. They see the break, they enter the trade, and they hope for the best. They don't discriminate between strong breakouts and weak ones. But here's how the professionals do it. They look at the character of the breakout. They want to see a clean, decisive move through the level, not a slow grind, not a hesitant push. The difference is night and day. A weak breakout will barely push through the level. It will close just a few pips beyond the break. But a strong breakout will gap through the level. It will close well beyond the breakpoint. That gap tells you everything you need to know about the strength behind the move. The biggest mistake traders make with retests is thinking that a simple touch of the level is enough. They see the market come back to the breakout area and immediately enter their trade. This is amateur hour. What's really happening is that you're trying to catch a falling knife. Just because the market touched the level doesn't mean it's going to reverse. You need confirmation that the level is actually holding. The solution is to wait for price action confirmation. Don't enter on the touch, enter on the rejection. Wait for the market to show you that the level is working. The technique I use is simple but powerful. I wait for one of two price action patterns, either an engulfing candle or a pin bar. These patterns tell me that the level is holding and the market is ready to continue in the direction of the breakout. Here's how I execute it. When I see the market approach the retest zone, I drop down to a lower time frame. I watch for my price action signal. But here's the refinement that separates the pros from the amateurs. I don't put my stop loss at the signal candle. I put it at the edge of the zone. Why? Because if the market breaks the signal candle but stays within the zone, I might still be right. The zone is what matters, not the individual candle. Let me show you my favorite retest entry pattern. It's the engulfing candle setup, and when it appears at a retest level, it's like a neon sign that says, "Enter here." Watch this chart. The market breaks support. It comes back to retest the level. And right at the retest area, we get a beautiful bearish engulfing candle. The second candle completely engulfed the first one, It's telling us that the sellers are in control. But here's what makes this setup even more powerful. Look at the volume. High volume on the breakout, low volume during the pullback, and then increased volume on the engulfing candle. This is textbook institutional behavior. If the engulfing candle is my favorite retest pattern, the pin bar is my most reliable one. When I see a pin bar at the retest level, I know the odds are heavily in my favor. The mistake most traders make is thinking any pin bar will do. They see a small rejection candle and think it's a signal. But they're wrong. You need a pin bar with real conviction. What I'm looking for is a pin bar that sticks out. The rejection should be obvious. The wick should be at least twice the size of the body. And it should be clearly rejecting from the retest zone. The solution is to be picky. Don't trade every pin bar you see. Wait for the ones that are obvious. Here's my technique. When I see a pin bar forming at a retest level, I check two things. First, does the wick clearly reject from the zone? Second, is the volume above average? If both conditions are met, I have my entry signal. The execution is straightforward. I enter at the close of the pin bar. My target is the next major level in the direction of the breakout. But here's the refinement. The best pin bars don't just reject from the level, they reject violently. They create a wick that's so dramatic, it tells a story. The story is simple. Smart money tried to push the market through this level, but it couldn't. Now they're going the other way. This is a rule that separates professional traders from the rest, and it's incredibly simple. Remember this. The first retest is the most important retest. This is my golden rule, and it's based on years of watching how markets behave. Here's the logic. When a level gets tested for the first time after a breakout, it still has maximum psychological power. All the breakout traders are still in their positions. All the stops are still there. The level still matters. But once that level gets tested, its power diminishes. Some of the breakout traders have already been stopped out. Some of the orders have been filled. The level becomes weaker with each touch. We've all seen a key level on a chart that gets tested over and over. Price bounces off it once, twice, 3 times. The problem is that most traders think that each bounce makes the level stronger. The reality is the exact opposite. With every touch, the level gets weaker, and they keep trying to trade the third or fourth retest and get run over when the level finally breaks. A level holds on the first retest and propels the market in the direction of the breakout. But when the market comes back to test it again, it breaks through like it was never there. So, key point, focus on the first retest. That's where the real opportunity lies. That's where the smart money is waiting to pounce. All the trap trader liquidity and institutional interest is concentrated on that first pullback. Let's lock this in. You now have a complete system for trading retests that puts you ahead of 90% of retail traders. Here is how they work together as a complete step-by-step system. First, you identify a clean breakout from a well-defined consolidation zone. You must confirm this breakout with a clear spike in volume. No high volume, no trade. Second, you mark the breakout point as a zone, not a line. Capture the entire area of the prior battle between buyers and sellers, including the wicks. Third, you wait patiently for the first retest of that zone. You must confirm that the pullback is occurring on low, decreasing volume. This tells you institutions are not participating in the pullback. Fourth, you wait for a clear price action confirmation signal to form within or at the edge of your zone. You are looking for a high volume engulfing candle or a long wicked pin bar that clearly rejects the level. Fifth, You enter the trade only after your confirmation candle closes. You place your stop loss on the other side of the zone, not just the candle, to give the trade room to breathe. And your profit target should be the next clear area of market structure. This system works because it's based on how the market really operates. It's not based on theory or hope. It's based on the actual flow of money in the market. You no longer see a retest and wonder if you should enter. You now have a systematic approach that removes the guesswork. And if you're ready to fit this into a full A to Z trading system, that's what our academy is for. Link is in the description.